Hello there, I'm Daniel for Kalkine Media. In mid-2020, FTX's chief engineer made a secret change to the cryptocurrency exchange's software. He tweaked the code to exempt Alameda Research, a hedge fund owned by FTX founder Sam Bankman-Fried, from a feature on the trading platform that would have automatically sold off Alameda's assets if it was losing too much borrowed money. In a note explaining the change, the engineer Nishad Singh emphasized that FTX should never sell Alameda's position. Singh wrote, "Be extra careful not to liquidate." The exemption allowed Alameda to keep borrowing funds from FTX irrespective of the value of the collateral securing those loans. That tweak in the code got the attention of the US Securities and Exchange Commission, which charged Bankman-Fried with fraud on Tuesday.
Right now, Kalkine is offering a 7-day free trial on its premium research reports. Get access to data-driven market insights combined with an in-depth analysis on financial markets across the globe. Don't miss it. Subscribe for the free trial now.
The SEC said the tweak meant Alameda had a virtually unlimited line of credit. Furthermore, according to the SEC, the billions of dollars that FTX secretly lent to Alameda over the next 2 years didn't come from its own reserves, but rather were other FTX customers' deposits. The SEC and a spokesman for the Bankman-Fried declined to comment for this story. Singh did not respond to several requests for comment. The regulator, which called the exchange a house of cards, alleged Bankman-Fried concealed that FTX diverted customer funds to Alameda in order to make undisclosed venture investments, luxury real estate purchases, and political donations. US prosecutors and the Commodity Futures Trading Commission also filed separate criminal and civil charges. Police in the Bahamas, where FTX was based, arrested Bankman-Fried on Monday evening, capping a stunning fall from grace for the 30-year-old former billionaire. His company collapsed in November after users rushed to withdraw deposits and investors shunned his requests for more financing. FTX declared bankruptcy on November 11th and Bankman-Fried resigned as chief executive. Bankman-Fried has apologized to customers but said he didn't personally think he had any criminal liability. According to an SEC complaint, the auto-liquidation exemption written into FTX's code allowed Alameda to continually increase its line of credit until it grew to tens of billions of dollars and effectively became limitless. It was one of two ways that Bankman-Fried diverted customer funds to Alameda. The other was a mechanism whereby FTX customers deposited over $8 billion in traditional currency into bank accounts secretly controlled by Alameda. These deposits were reflected in an internal account on FTX that was not tied to Alameda, which concealed its liability. As Bankman-Fried grew FTX into one of the world's largest crypto exchanges, consumer protection was a central tenet of his pitch for crypto regulation in the United States. Bankman-Fried stressed this theme in countless statements to customers, investors, regulators, and lawmakers. FTX's auto-liquidation software would protect everyone, he explained. He did not tell lawmakers about the software changes to exempt Alameda. Indeed, he told investors that Alameda received no preferential treatment from FTX. The SEC complaint states Bankman-Fried had directed subordinates to update the software in mid-2020 to enable Alameda to maintain a negative balance on its account, adding no other customer account at Alameda was allowed to do so, which would allow Alameda to keep borrowing more FTX funds without the need to provide more collateral. In software tweaks made in August of 2020, Alameda was designated as the primary market maker, according to a Reuters review of its codebase. Market makers are dealers who enable trading in an asset by standing ready to buy and sell it. To explain the change, Singh, the chief engineer, inserted a comment into the code saying Alameda would be liquidating prevented. He included a warning not to liquidate the PMM. Only Sam Bankman-Fried and a few other top FTX and Alameda executives knew about the exemption in the code, according to 3 executives. A digital dashboard used by staff to track FTX customer assets and liabilities was programmed so it would not take into account that Alameda had withdrawn the client funds. Well, that's all for now. Leave your thoughts in the comments and don't forget to like and subscribe and hit the bell icon for future notifications. I'm Daniel for Kalkine Media.